Okay, good afternoon, everybody. Today is December 10th. It's Friday. The market just closed 9 minutes ago. This is the weekly take on the market. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at IBD. Here's the disclaimer. I'm not licensed. Cannot tell you what to buy or sell, when to buy or sell, how much to buy or sell. This is for educational and entertainment purposes only. Take a moment to read this. Thank you. All right, so the usual process, we'll get into the markets. We'll go into the industry groups, the couple stocks that I'm watching, good, bad, or indifferent. And then we will do the quote of the day. I actually have two. I couldn't decide. So if there's time, we'll do both. So this is a tweet that I thought was very interesting on December 1st. 17% of the stocks in the NASDAQ were making 52-week lows. We'll pull up the chart on December 1st, but that was a few days ago. The market looked really bad. The crowded long basket, I honestly don't know much about what that means, you know, how they're measuring that, but basically it's, you know, the favorites are really underperforming. So you have the overall market, which is fine. If you just looked at the indexes, it looks great. Under the surface, it's pretty lousy, bordering on awful for some areas. I don't know if you guys remember Livongo, LVGO. It was a stock I was long in 2020. They got bought out by Teladoc for X amount at, I don't know, let's just say Livongo was worth 10 billion at the time or whatever the number was. Now the combination of Teladoc and Livongo together are worth less than Livongo was by itself. So that's how much Teladoc has gone down, for example. Peloton, you know, there's some really bad ones, which is why I think and truly believe if you're going to buy individual stocks, especially with any kind of size, you know, 5%, 6%, even 2 or 3%, you have to have a sell discipline. Doesn't mean you have to be looking to sell every 5 minutes, but you have to have some type of sell discipline. This is another great tweet, and I retweeted it because I thought it was phenomenal, amazing. The original tweet, though, was just like mind blowing. The performance. It was like the top 5 stocks were up X amount, and the rest were down. We're in a bear market, like minus 20%. And then this guy Gavin Baker pulled the tweet because he said, "I apologize. Where I got the data might not be correct," and so he retweeted with this. So the NASDAQ at this point was up 21%, and X the top 5 stocks, it's up 5%. So that's probably what a lot of you feel, especially lately. It's really there's been alligator jaws. So at first it was fine, and then you've got Nvidia, Apple, you know, Amazon, Google, etc. Oh, there they are, right there. Tesla doing this, and the rest of them are doing that. So it's not quite a bear market. They're not negative, the rest of them, but it is not that they sure are not performing very well. This is interesting. Here's a chart. I just pulled it from Wikipedia of the NASDAQ performance year over year over year, because I feel like it's very hard for the markets to stack 3 years in a row on top of each other, like accelerating sales or accelerating earnings that we might be looking for. So if the market does 5, 15, 25, very difficult to have another really good year. And because I couldn't get the whole chart in here, you know, 90, 96, 97, 98, 99 were all great years. And then in 2000, you know, rolled over. That's the first red mark. And then you can see in 05, 06, 07, you had accelerating, not that great, right? 9 and change. But then 08 minus 40%. And then in 11, 12, 13, it was accelerating from -1 to 16 to 38. And in 14, wasn't a bear market. 13% is more than fine. I'll take 13% on my money for the rest of my life every year if I could. But it was, you can see it really underperformed the previous year. And then in 15, you made 5, 16, you made 7, and in 17, you made 28, and then in 18, it was down. So it's very difficult to stack consecutive years of performance. It just kind of makes sense, right? But it's not perfect. I was looking at Japan before it topped in 1989. And it had, a lot of positive years in a row before it, finally caved. And then I was trying to think of other markets where I could, study this. It's just not enough developed market history to get like a really good statistical sample. And a lot of this is more just for fun. And I like to think outside the box. And I like to stretch my imagination on the possibilities. So in 19, we did 35, and 20, we did 43. And so far this year, we're up 25. So it's really, you have to go back a long time to probably 90, 96, 97, 98, or really probably 97, 98, 99 to find that type of incredible performance. So maybe next year is a slower year, and it seems that maybe the market's anticipating that with the performance in the underlying stocks. A lot of times you get into a new year and just, I don't know what it is about a calendar. The market really shouldn't care, but the changing calendar can affect the market. And the market in 2000 topped in March, but really, I remember the first trading day in January of 2000 was incredible fireworks, because everybody was worried about the computer, the Y2K bug. If you're not familiar with that, all the computers were just going to crash, nothing was going to work, and it seems so silly in hindsight, but it was a very real fear then. But none of the stocks seemed to be worried about it. So I was long going into the year 2000, because that was the normal strategy. I was long all the time, it seemed. And market just boom, 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 had a stellar week, if my memory serves correctly, and just boom, right out of the gate, and then fizzled, So and then the Nikkei topped in January of 89, I believe. So, maybe let's see what happens come next year, especially early on, see how the market holds up. But, the food for thought that it's very difficult for it to stack on a fabulous year again. But that doesn't mean it can't be up 13%, like you look in 2014 or something, something good. So I'm not saying it has to be a bear market. I'm just open to the possibilities, right? Anything is possible in the stock market. All right, so let's get into, you know what? Let's pull up the charts. I apologize. Forgot that I didn't even pull up the chart. So here's a chart of the NASDAQ. The market, this isn't quite correct, because the market just closed about 10, 15 minutes ago, but you get the idea. And I think the market, or the average stock, or the median stock, or whatever you want to call it, really basically stopped going up in February. That's where the alligator jaws of the 5 stocks, going up, and the rest going down, starts to become more obvious. And you've got NASDAQ at 14 here. And I know I've talked about this a million times, but I just feel like something's got to give. Either NASDAQ has to figure this out, and that's possible. Maybe all of the stocks have already gone through their corrections. There's so much good merchandise, big, great companies, big winning stocks previously that are down 25, 35, 50%. So maybe that rights itself, but the RS is just putrid. And today the S&P made a closing high, and the NASDAQ didn't. How far off the high are you? Somebody taught me the correct way to do this math. And I don't know if this is, let's just say it closed here. Obviously it could be different. You know, I don't know exactly where it closed. But you know, if the S&P closed at an all-time high, the NASDAQ's roughly 3.5% from an all-time high. So let's see what the QQQs, 408 to 398, but the SPY, now this might not totally reflect that because of, you know, the SPY and the futures, and sometimes they can be a little bit different, but let's look at the S&P. This is 47.12, let's say. And like I said, I can't confirm exactly that, but somebody that I follow on Twitter that I highly respect, that does good work, said this was a closing high. So I'm going to go with it. It looks like likely that it was a closing high. So you have a closing high in the S&P. So the indexes are acting, they're holding up fine, right? And we all know why. Nvidia, Apple, Tesla, etc. Do we want to look at the Russell? No bueno. Do we want to look at emerging markets? Terrible, right? They just do nothing. Years and years and years of underperformance. So right now, as we sit here, someday the world may shift. I remember when it was all the rage to own emerging markets, the BRICS, right? Brazil, Russia, India, China, that was what you owned. And one of my greatest trades ever was in Petrobras. I'm sorry, PetroChina, right there in that move. And at that very moment, coming out of a cup with handle and a 5% yield and earnings and sales, and Warren Buffett had a position in it. It's like a layup. Incredible. So maybe they'll someday come back. I don't know. I'm starting to wonder myself. All right, let's look at the industry groups. And it's semiconductor fabless. The semis, the chips, the story is long in the tooth, but strong. And I guess everything is going to have a semiconductor chip in it, or more than one, maybe even us. And your refrigerator and your dryer and your everything's going to have a chip. And so these guys are just knocking it out of the park. You know, Nvidia, it looks a little tired to me, but you know, that's like the worst thing to ever say about this stock, because it's been so strong. You got support here on the 10-week line, but you know, it was down today with the market really roaring at the end of the day. You had a really big push at the end of the day in the market, and Nvidia just didn't have any oomph. AMD, it looks very similar, hanging in there really well off the 10-week line. The group as a whole, let's look at SMH. Nothing wrong there. You just can't see anything wrong with that area. So let's go to retail department stores. I don't know about this group. It's so small. Is DDS? Yeah, that's topped. I think that game is over. Now, I believe they paid a dividend, special dividend. Yeah. So if you were in this, it's not as bad as it looks. It's not down. What's, gosh, 150 points. I don't remember what the special dividend was. I think it was a lot. Let's say 25 or something like that. Trucking looks very interesting. This group looks very good. SAIA, that looks very constructive. Let's see what else is in that group. ODFL. Yeah, I mean, it's just nothing wrong with that. What else? I don't know this one. PTSI. Let's look at that one. Just too thin. That's why I don't own that. I would never buy that. The liquidity would bother me. But that looks very good. So I think SAIA and ODFL, and let's see what USAK looks like. Nah, not as good. So I think those are probably the leaders. Auto is Tesla, finance consumer loans. Honestly, I don't know how this group is holding up so well because UPST is just getting taken to the woodshed. It looks just rancid. It's amazing how it can be so good and then so bad. I'm not surprised. Yet sometimes I don't know why would I be surprised? That's the stock market. This stock is awful, just cannot get out of its own way for whatever reason. And it led the group up. So I'm just amazed that this is still hanging in there. Now, UPST made such a big move that the relative strength is still 99. And I've discussed this before, so go back and look at maybe 2 or 3 weeks ago. How can the RS be 99 when the stock's down 50%? Well, it's because it made such a huge move. If you're new, if this is your first video or you missed that one, the Marcus Smith YouTube channel stores all these videos, unfortunately, for me. So all my flaws, the things that I get wrong are stored forever on the web. But this stock's made a big move, and that's why. But remember, look at what the short-term ratings are. If you're kind of confused, you see an RS rating, it doesn't quite make sense. I encourage you to use this technical folder, and you'll see the 3-month RS is 2, and the 6-month is 37. Really just absolutely underperforming pretty much the world in the last 3 to 6 months. What else is in this group that could be? I don't know any of these names. Let's pull up ATLC. Wow. So huge move. And I've never heard of that one. It's just too small. 113,000 shares, 7.5 million float. Just would have never shown up on my radar. So these are all the same groups we've seen. Building Mobile has been interesting. I really like this one, Skyline. I am not in it, and I just don't know why. I've never been able to pull the trigger on it. But that stock has been a really good one. Coal is falling down the food chain, which was number 1. There's computer software security. I always like that group. There's so much quality as far as companies. The hard part with that one is I just don't have enough technical expertise to know why CrowdStrike is better than Zscaler, et cetera. But they all look very toppy. Although, wow, Zscaler that's a pretty good weekly bar. You basically got some support. The jury is still out. I would think lower, but I wouldn't bet on it. So that one's holding there. CrowdStrike looks a lot worse. Sentinel-1, which was a stock that I like trading, just really active, and that's the good and bad of trading that one. They reported and the stock gap down, but it's holding. So, and then the best one is FTNT. Look at that. It's probably the only one above the 50-day. So the Insta groups aren't telling much of a story. They look pretty much the same. Stocks to watch. Well, I would say we've looked at quite a few already, but let's see if there was anything that I didn't talk about that I wanted to talk about. My list here of stocks. I think I guess we can always go to the stalwart Tesla, hanging in there. Support on the 10-week line, 50-day, looks fine. Apple, it's short term, it looks a little, that's a big move for Apple. 17% in 17 days for the biggest company in the world. Seems like a lot, but if you look at a chart, you step away, it doesn't Doesn't look really climactic. It's really early out of this base. Got this really big base on base on base. So I don't know. I don't know what to make of that. It's just an incredible company, obviously, and the stock is along for the ride. All right, so let's do the quote of the week. And I'm going to use a quote from Gavin Baker, who was the guy that I grabbed those tweets from, and I was watching some YouTube interviews he did. He is a managing partner at, I'm going to butcher this, Atreides Management, but you get the idea. He worked at Fidelity, he was a semiconductor analyst at Fidelity a long time ago. And he had a lot of cool stories, because I like to hear the stories of Fidelity. So he's worked, closely with Will Danoff and some of the other great fund managers at Fidelity. He says, I'll never buy a stock just because of its chart. It's an important input into my process. Check, I agree with that wholeheartedly. It goes on to talk about the 52-week high list. It's the smart place to work off of, but he does say, admittedly, I like to look at the 52-week low list. So even though he knows statistically you're much better off buying off the 52-week high list, his natural instinct as a human is to look at the 52-week low list for ideas. He says, I will buy. He goes, I'll never buy something just because the chart looks good, but he goes, I will buy companies that I like if the chart looks bad. So that's probably why he likes to look at the 52-week low list. But if he really likes the company, he's not going to worry so much about the chart. But the quickest way to determine if something's good but average or mediocre is just look at the chart. Good businesses, the charts are usually up and to the right. So that makes total sense, right? If you look at all the great businesses out there, Google, Amazon, Apple, the long-term charts are up and to the right. It's NVIDIA up and to the right in the last 10 years, So it's important. You definitely want to use a chart, but you don't want to marry the chart, right? I like the quote, it's an important input into my process. And you can find, if you're interested in just search him on YouTube. There's a couple of interviews that he's done. The amount of information, I'm going off a tiny tangent, out there nowadays is just incredible. The access to good people, good investors, and their thought process is unprecedented. Never in my life could you watch an interview with all of these guys and get their thought process on how they look at stocks, et cetera. So it might be a bit overwhelming, but it's hard to know what's a good process and a bad process. But as general, just look at the people's charts. Is what's Stanley Druckenmiller's chart? What would his long-term chart look like? What would Gavin Baker's long-term chart look like? What would any of these people that I talk about, what would their personal chart look like? So the original quote I was going to go with was not Gavin's quote. I added Gavin since I used a couple of screenshots from Twitter, but this was my original quote from Raoul Pal. He's the founder of Real Vision. He worked at Goldman Sachs. He says, I can sense people are looking for a certain future for markets, but the truth is there are no gurus. No one knows. That's probably my favorite quote in the stock market. No one knows, or I don't know. Ed Carson on IBD Live once, somebody said something about the fact that Ed often says, I don't know, and they kind of were like beating him up over it. And I was like, well, you guys are crazy, because that's a huge edge that Ed has, is he knows that he doesn't know. And no one knows where the stock market's going, not the Fed, not the president, not the best hedge fund manager in the world. You just watch and observe. That's what made Bill so great, is he just relied day by day by day, observing what the market is doing, and then just put it all together and make a decision. If you're wrong, you get out, and then you make your second best decision. If you're wrong, you get out and you try again. And And eventually, if you have a process that works, you'll go on a run, and then things will get tough for you, and you'll make a bad decision, and so the bottom line is you just have to be willing to put in a little work, observe it every day. And I know as the year nears its end, people are going to tell you what they think the market's going to do for 2022. And I will tell you, no one knows. No one knows what it's going to do. So I'm going to observe it on January, I think it's open January 3rd, which is a Monday, and then on January 4th and January 5, and just piece it together slowly but surely, and do my best to manage the odds that way. All right. Thank you, guys. Have a great weekend. Reach us at marcusmith.com, 800-831-2525. We will see you next week. Yes, I will have one more next week. Then the following week is Christmas Eve is on a Friday. I don't know. We'll play it by ear. We'll see what the market's doing as far as that. But I will be back next week. Thank you, everyone. Have a good day.